So we're working from this learning outcome statement about making the adjustments to the income statement for the pension disclosures. So here's our income statement from our example. Revenues at 25,000, operating expenses at 15,000 gives us an operating income of 10,000. Take off the interest expense, or the net interest income expense line of 2,000, gives us pre-tax income of 8,000. Okay, we can forget about taxes. Now, somewhere in your question, your item set, they have to give us the pension data. Okay, so they have to tell us about the pension costs. And our text, starts to mix IFRS versus US GAAP. So down here they have the pension cost, and they said the pension cost came to 105, okay, 105. Now, what I want you just to realize is this entire pension cost is already right in here. 105 is in the operating expenses. Our job is to make the following adjustments. What we're going to do is we're going to remove this 105, so we'll drop it down, and then we're going to take the components of this pension cost. And here's where they mix the US GAAP. They talk about service costs and they talk about interest costs. Okay? So we're going to remove those. So in this expense, we're going to remove all of the pension cost. The only thing we're going to leave in there is the service cost. So we'll make these adjustments. Now, the interest cost will be moved down here. Okay, so there it is. So what we're going to do is we're going to make this adjustment, and then, from an analytic point of view, you're looking at the operating income. That's what we're doing. Removing the entire pension cost, leaving only the service cost, and then we're moving the other components down into different categories so that we can focus in on this operating income. So what you're going to do on the exam is move the interest cost down here. So let's make the adjustments here with our example. Okay, so they told us that the total pension cost was 105. They said that the service costs were 50. They said that the interest costs were 75. Okay, so let's make these adjustments right away. So remember, this revenue is not going to change. Let me write it over here. Here's the adjustments, 25,000. Okay, the revenue figure is not going to change. The expenses of 15,000. What are we going to do? We're going to have to lower this. Okay, so don't get confused by this minus. Let me get rid of this so we're not even distracted. I'm going to remove 105,000, and then I'm going to put back the 50,000. Okay, I'm going to remove 105 and put back the 50. Okay, so once we do this, we now have 14,945. Okay, so now we can get down to our operating income, which is 10,055. So the first thing that we notice is by only including the service cost, the operating income has gone up. We're going to take the 75 from the interest expense. We're going to put it right here. Okay, so we're going to increase this by 75. Okay, so let's don't get fooled by this minus sign. We know what to do on an income statement. So now this net interest income expense, we're up to 2,075. There's going to be one other element that I want you to keep your eye on here, okay? I didn't put it in this example, but let's just put some stars around this here, because I think that you're going to have to be aware of it. Remember, in our item set format, they're going to have the information throughout the case, and you're going to have to put them together. So I've moved the 75,000. The other item that needs to go in here is a figure for the actual return on plan assets. In the pension cost here, they were referring to the expected return on the plan assets. And that was something that they had given us here in terms of $20. Okay, so this information, it kind of reflects US GAAP thinking. We're going to remove that expected return on plan assets. We're going to make an adjustment. Now over here, we're going to drop in the actual. So let me just put a little arrow here. Actual return on plan assets. So somewhere in this item set case, you've got to find that. We already know it. I'm anticipating this. Okay, so from the case, they told us it was $28. So that's $28. We earned $28. So we're going to reduce this expense. So the net figure then for the net interest income expense comes to $2,047. And then I could follow through here, and I could get my pre-tax income, which was $8,008. Okay, it's gone up, and it went from $8,000 to $8,008. That doesn't have to be the case. You know, that's because we had a really large actual return on the plan assets. So let's just review what we've done here. They're going to give you this income statement, and then they're going to ask you in the question, in my opinion, to make the adjustments. So what would the adjustments be? The adjustments will be remove the pension costs from the operating expense. The only component of the of the pension cost that stays in operating expense is the service cost. So we can now calculate our operating income. That might be a question. The next adjustment, move the interest cost down to the category net interest income expense. And then make sure that you piece it together. This is the one that's going to be on its own, the actual return on plan assets, so that we can now calculate the net interest income and expense figure to get down to the pre-tax income. And if they give us a tax rate, we can get down to the after-tax income. So to crack this code, we now know the steps involved. All right, and we'll move on to our other example about cash flows.